All right, let's jump right in. Today, we are going to tackle one of the most important skills you can have: how to look at a price chart and actually understand what it's saying without getting bogged down by a ton of confusing indicators and tools.
You know, if you've ever opened a trading platform and been hit with a screen full of these little green and red bars and just felt totally overwhelmed, trust me, you are not alone. It can look like some kind of secret code, right? Something only experts can understand. But here's the thing, it's not a secret code. A price chart is just a story. It's the story of a battle between buyers and sellers, and you don't need any special gadgets to read it. You just have to learn the language.
And that's exactly what we're going to do. We'll start with the absolute basics, the building blocks. Then we'll zoom out to see the bigger picture. We'll talk about why perspective is everything, read a short story together, and then wrap it all up with one key idea.
Okay, first things first. Let's break down the single most important element on this entire chart, the candlestick. So each one of these little candles represents a chunk of time. It could be 1 minute, it could be an hour, it could even be a whole day. And in that time, it tells you the complete story of the fight between the people who want the price to go up, the buyers, and the people who want it to go down, the sellers.
And every single candle, no matter what it looks like, gives us 4 crucial bits of information. Number 1, where did the price start when this time period began? 2, what was the absolute highest price it reached? 3, what was the absolute lowest it fell to? And finally 4, where did the price end up when the time was up?
So here's how those 4 points come together to make the candle's shape. You see that thick colored part? That's called the body. It shows you the distance between where the price opened and where it closed. And those thin lines sticking out, we call those wicks. They show you the full journey the price took, all the way to its highest high and its lowest low.
Now the color, this is super simple. If a candle is green, it just means the price closed higher than where it started. Simple as that. The buyers were in control, they won that round. If it's red, well, the price closed lower than where it opened. The sellers were in charge, and they won. That's it.
And I love this analogy. Think of it like a boxing match. The colored body of the candle tells you who won the round. But the wicks are the really interesting part. They tell you about all the punches that were thrown but didn't quite land. A long wick at the top means buyers tried to push the price way, way up, but sellers punched them right back down. Okay, so reading one candle is a great start, but the real skill, the real magic, happens when you see how they all connect to tell a much bigger story. When the buyers are winning round after round, you get what we call an uptrend. You can just see it. The price is climbing from the bottom left of the screen to the top right. It's making a series of higher highs and higher lows. This is the visual story of buyers being completely in control. And the opposite, of course, is a downtrend. This is when the sellers are in charge. The price is falling from the top left to the bottom right, making lower highs and lower lows. It's the story of sellers just dominating the market. Now, this next part is absolutely crucial. The story a chart tells can change a lot, depending on how closely you're looking. This is the power of time frames. So if you look at the price on a 1-minute chart, where every candle is just 60 seconds of action, it looks chaotic, right? It's just noise, it's frantic. But if you look at that exact same price action on a daily chart, where each candle represents a full 24 hours, the whole picture becomes smoother. The overall direction is suddenly way clearer. You know, trying to understand the market by looking at a 1-minute chart, it's like trying to read a novel by looking at individual letters. The daily chart, on the other hand, is like the chapter summary. It gives you the main plot. And it's so important to understand that main plot first before you ever try to zoom in on the details. Okay, so let's put all of this together. We're going to read a short 5-candle story on a daily chart and see exactly what it's telling us. So here's our story. Day 1, we get a nice solid green candle. Buyers are clearly in control. Day 2, an even bigger green candle. Okay, buyers are feeling really confident now. They're pushing hard. Then day 3, a little tiny indecisive candle. The market kind of just pauses, takes a breath. But on day 4, boom, a big red candle shows up. Sellers have arrived. Finally, on day 5, we get another red candle, but look at that long wick on the bottom. Sellers tried to push the price down, but buyers fought back hard before the day was over. A beginner looks at this and reacts emotionally to each day. They'd be buying on day 2, then panic selling on day 4. But an experienced person, they don't react, they observe. They see the whole story. A strong move up, a little pause, and then some selling that, hey,
might already be losing its power. They're trading the story, not the individual word.
And this all brings us to the single most important rule you can take away from all of this. Always, always remember this. A single candle is just one word. It gives you a tiny piece of information. But a group of candles, that forms a sentence. It gives you context. It gives you meaning. Your job is not to react to every single word. It's to step back, read the full sentence, and understand the story the market is actually telling you. So, now you can look at any chart and read the story of what has already happened. The big question, of course, is, how do we use this story to get an idea of where the plot might go next? Well, that's where we get into support and resistance, and we'll dive into that in our next explainer.